What does it mean to be a turnkey property?
Turnkey is everything's done, and this is strictly a passive investment.
What are some of the tips and maybe some of the mistakes that you've seen when people investing out of state? And how does turnkey provide maybe a solution for that?
I say turnkey strategy works in the main towns in every state, west of the Appalachians, east of the Rockies, and north of Texas. Just the greatest destroyer to your wealth is taxes.
I paid like over $300,000 in taxes one year. I think it was like 2017 or 2018. It was like painful.
The big thing is what's their eviction rate, what's their vacancy rate, and how many units do they manage?
How long does this process take?
The rehab's usually done in 3 to 4 weeks, and then we got to wait on the bank generally 2 weeks. So it could be as fast as 6 weeks.
Hi everybody, Jose Luis Morales here. Welcome back to another episode of the Residual Real Estate Agent Show. Today we've got a very good friend of mine. His name is Jimmy Vreelen. He is from St. Louis, Missouri. I know Jimmy through a mastermind called Collective Genius. We become friends. We play basketball together here and there. And today we're going to be talking about investing out of state and turnkey rentals. So I know a big part of our audience is people from California. I feel that returns in California are extremely low. I've hesitated investing out of state because I'm not as familiar with investing out of state as I am here in California. However, the more I get involved in Collective Genius, I know that there's other options, and I know that there's other places like St. Louis, Missouri, where people are earning a lot better returns in terms of cash flow. And I couldn't think of a better person to educate you guys on that but himself, Mr. Jimmy Vreelen. How are you, Jimmy?
I am good. Thank you for that nice intro.
So for our viewers who don't know who you are, just a little bit about who is Jimmy and how did you get involved in this wonderful world of real estate / turnkey rentals and helping investors invest out of state.
I guess my main background is I went to West Point for college. I became an Army Ranger. I did 3 deployments between 03 and 08. And in my second deployment, I read a little purple book called Rich Dad, Poor Dad. I'm sitting in the middle of the desert. I'm in a tent. And my mom had she had saw Kiyosaki on Oprah or something. She's like, you got to read this book. So I read that book and I start investing in real estate while I'm overseas because you can't spend any money. You're not paying taxes. So I was crazy flush with cash. And I was like, I got to try to play this real estate game. And so I bought my first rental probably 05. And then from then on, I would deploy, buy a house. And then in 08, I got out of the military, but I was still buying 1 or 2 houses a year, just trying to build up my cash flow. And then eventually I got 20 units by 2015. And then I started to really figure this out. And then I went into corporate sales, into medical sales, and I was able to leverage my sales experience to start raising money. So 2016, I bought 60 houses. 2015, I bought 60 houses. 2017, I bought 70. And then I was able to quit my corporate job. And I've been full-time real estate since then. But I got up to around 150 rentals, right? And you might be thinking that's really cool. But I had one problem. So I was house rich and cash poor. And after that, so luckily at this time, I realized there's a secondary market for occupied rentals called turnkeys. And I already had property management because I had to have them for my own units. And so then I started selling off my occupied units.
So for our viewers who don't know what a turnkey is, like what does it mean to be a turnkey property?
Yeah, so it just means a rental house with a tenant already in place and all the work already done. So your goal as a turnkey buyer is to truly be a passive investor. It is, you do not want to be my management team bothering you with maintenance calls, bothering you with vacancy calls. Like pretty much my team is a ground team. And then you probably need to check your statements once a month and let that asset build up cash flow and build up equity on your balance sheet.
And then for our viewers out there, like I've never invested out of state. I've always been hesitant to invest out of state. And the reason is I don't really know like much about other areas. Like I was talking to some of the guys at Collective Genius and they're in Columbus, and they told me about a town called Youngstown. And I guess that town used to be really big and then lost a lot of the jobs, and then basically it turned almost into like a little bit of a ghost town. So like one of my concerns investing out of state would be that because I don't know the area, I may end up buying in maybe areas that aren't that good or that don't produce much cash flow. What are some of the tips and maybe some of the mistakes that you've seen when people investing out of state? And how does Turnkey provide maybe a solution for that?
So, like the anxiety for out of state and picking the right town. If you're an MSA of over a few 100,000 people, I haven't seen anybody go wrong. So, like the Kansas City, all the bigger cities in the flyover states. So, Kansas City, Memphis, St. Louis. I say turnkey strategy works in the main towns in every state west of the Appalachians, east of the Rockies, and north of Texas, and then probably south of Minnesota. I'm not going to bag on any turnkey providers up north, but a lot of investors don't like it because the winters are so long and so many pipes can break. And so, when I think of California, it's like it's a different world, just cost of living, cost of real estate, all that type of stuff. That I'm trying to think, you're going to have to trust your turnkey provider. Because I've heard horror stories of investing in St. Louis because people are selling properties in D-class areas in the ghetto. And so me as a turnkey provider, I'm not going to sell you D-class. And then if you buy C-class from me, I'm going to give you a disclaimer and say, hey, you might not want to do this. But A and B class houses, like throughout the Midwest, it's very hard to go wrong because I like to compare St. Louis and the real estate market to my athletic career. It's exceptionally mediocre. Like people will say, hey, Jimmy, what's so great about St. Louis? And I'll say, absolutely nothing. And so what does that mean? It means in the booms, it doesn't, the prices don't raise that much, but in the bust, prices don't fall that much. It just kind of stays steady Eddie, and it's in an upward trajectory.
And then what are some tips that you might be able to give people like when finding a turnkey provider? Because I think obviously a part of it, like the easy solution is just looking for the relationship. But how does somebody what are some signs where can somebody do some research? How do you find out like who's really doing good things and who's not doing good things with turnkey?
Actually, I will send you guys our turnkey provider checklist that gives you like interview questions, all that stuff. But you can send that off to your audience. But the quick answers is, you want to make sure this turnkey provider has some experience, that preferably they do the flipping and they do the managing. And if they do the managing, they manage over 300 units. Because to get to that point, you got to have certain systems, certain processes, certain sophistications. You want to know the vacancy rate. You want it to be under 5%. Average maintenance costs. You probably want to keep that under $1,000 a unit per year. I'm trying to think of the big thing is what's their eviction rate? What's their vacancy rate? And how many units do they manage?
When you say turnkey, does that mean that the property is fully remodeled, like new roof, new plumbing, new electrical, new flooring, new kitchen? Is that basically what that term means of turnkey?
Yeah. You got people on bigger pockets who really want to become Burger Key investors, where they force equity. They do the rehab, they pay for the rehab, they do the rehab, they're all in at 80%, and then they refi out all their cash, right? Like that's an active investment. That's an active side hustle. That is not turnkey. Turnkey is everything's done, and this is strictly a passive investment.
Can you give us an example of maybe like a current deal or maybe like a deal that maybe like somebody has done of what a turnkey rental could potentially look like, just for our audience to kind of get an idea?
Yeah, I was just selling some houses today. Let me see what the last house we sold was. So what you're going to get from me and my team is a pro forma of the house. So you're going to get a pro forma, and then you're going to get a property detail report where we have the pics and everything. And then the other thing about a turnkey provider is you want it to be like Henry Ford Real Estate. You want it to be just assembly line. So if you've seen one of our flips, you've seen any of our flips, right? So here's what you'll get from us. You'll get the pics of the house. And this is a straight up grandma special.
Is that before or after the turnkey right there?
This is before. This is generally the state you're going to get the property in. So what we ask people to do if they're going to finance is they put the house under contract when the rehab starts, because generally our rehab crews are done before are generally done before the bank's ready. And so as a turnkey provider, here's what you really care about. It's your mechanical expenses. So your roof, your water heater. So a roof can be anywhere between $5,000 to $7,000. Water heater's $1,300, HVAC's $5,000, and a panel's $1,000. You want to avoid those expenses, right? So on this deal, we're going to replace the roof. The AC's 30 years old. We're going to replace the HVAC. We'll probably keep the furnace because it's only 12, and then the electrical panel we'll keep because it's only 10 years old. And then you're also going to get our scope of work of what we're promising we're going to do for you.
For this deal, what would the purchase price be? What would the price that you guys are selling it for, renting it for?
Yeah. So then you're going to get a pro forma from us. So it's going to rent at $1,500 and it's going to cost you $160,000. And then this first table we send you is your year one performance. But here is why turnkey is so awesome. Jose, you ready for this? This is why I don't invest in the stock market. I hate winning only one way. I like to win in 4 ways. So when you buy rental real estate, you win in 4 ways. You win with cash flow. The tenant pays your principal down. Your tax savings, and especially if you live in California, you need tax savings and the appreciation. And you can reasonably assess that houses in St. Louis will appreciate at 5% a year. So if you look at that IRR, it's consistently 30% year over year. And so we show our buyers the first 10 years of the performance of the asset. So, and I'm just showing you guys pics of what a good turnkey house looks like after it's done. So a nice little house like this. This is what we do all the time. Same floor, same pit, same paint. You know, what a tenant's really looking for is a good, decent, clean kitchen. So you're going to we put most of the values in the kitchens and bath, but it's just, this is what we do over and over again. It's like assembly line. So we use the same scope on every house. We just do the same thing over and over and over again.
So basically, where I feel that you can help people is if somebody's looking to be an active investor, obviously they can go find their own properties, they can go off and find them. But if they're looking for more of a passive way to earn real estate and maybe get some of their money out of the stock market, this would be a good option. The other way that I'm seeing that this would be a good option is, let's say somebody owns a couple of properties in California, and in California, because prices are so high and rents are okay, maybe the return on investment isn't that great. They can actually move that money to somebody like you. And I think you were telling me a story how somebody sold the property and then they bought 5 or 6 different properties. Now, cumulatively, they're earning more potential cash flow on the deal, basically.
Yeah, we do that all the time for California people. Is someone will sell out of a big house in California, do a 1031 exchange, and then we'll just basically sell them a portfolio.
Now, you said a term called IRR. For people that don't know what that term is, what does the term IRR mean?
That's the internal rate of return. It's so all the ways you realize a return, you sum those up annually, and then that's your internal rate of return. So because with passive real estate, you win 4 ways. We call it the 4 pillars in cash flow tactics, but it's appreciation, cash flow, leverage, and tax advantages.
What could somebody expect to receive in terms of, or like, let's say I buy the property, the one that you just told us about, and let's say it's 156. Let's say I put a certain amount of debt on the property, like maybe like 20% down. Any idea as to how much cash flow that would leave me and what the expenses would be on something like that?
Yeah, I got it in the pro forma right here. So you'd be looking at around $215 of cash flow a month. That's 20. This is just year one. And then here's the real magic, Jose, is you get that loan, and that loan is fixed for 30 years, right? And so where the real return starts opening up is rents and the value of the house go up 5% a year, but your cost of capital is the same. So look how this is the magic. We call it that cash flow gap. Your mortgage, this is the magic. Your mortgage payment stays the same throughout the life of the asset, and your rents are going to go up 5% a year. So you're getting $215 a month year 1, 265, year 2, 318, year 3, and so on and so forth. But you're looking at the end of 10 years, you can reasonably expect $500-600 worth of cash flow a month while the tenant's paying your mortgage down for you. It's magical.
Are there certain lenders that specialize in turnkey investing?
There's going to be different lenders that specialize in it, and your turnkey provider should hook you up with the lender. So we work with a local guy and a national guy.
What does the process look like? Because I know that, and this is kind of where I got a little bit confused. You said that you guys buy the property for cash first, fix it up, and then resell it? Or does the investor put a deposit on it? Or what does the process look like for turnkey investing from an investor standpoint?
We'll buy it cash, and then once we start the rehab, we ask for an earnest money deposit of a couple grand, and then put the house under contract. But then our rehab was generally done faster than the bank can move. So as soon as the rehab's done, we send you an inspection, we send you pics. And if you bless off on it, then we call the bank, say, hey, they're ready to close, and the deal closes.
How long does this process take from the time that I put the deposit to the time that rehab gets done and the property gets closed out?
Yeah, the rehab's usually done in 3 to 4 weeks, and then we got to wait on the bank generally 2 weeks to get the appraisal and then close the deal. So it could be as fast as 6 weeks.
Anything else as it relates to turnkey rentals that you think would be valuable to people?
The big reason turnkey works is because of that 30-year fixed rate loan. So, you're in residential real estate. What do you tell people about the loan they get on their house? A great investment, right?
Yeah. Well, I a lot of and this is kind of what I've been realizing more recently, a lot of it is when you look at it on a longer term picture, like you are right, like for you, that's where you really see a lot of the benefits. When I started investing into real estate, Jimmy, I didn't take into account the principal pay down. I didn't take into account the interest rate deduction, the tax incentive. I didn't take into account the depreciation. All I took into account was the cash flow. But now that I'm more sophisticated, there's a lot more different benefits. And that's essentially what you're outlining, that there's just a lot more incentives to people, basically.
We say at Cash Flow Tactics, we say cash flow is just a permission slip. I don't think you should be buying houses that you have to feed with your active income every month. But to be honest with you, that I will tell you personally, what I've built wealth in is like the cash flow has been negligible. It's been the principal pay down plus the appreciation. Most people are like, wow, a 30-year mortgage is such a great investment. Even Warren Buffett says that's the greatest investment ever. But very few people know you can get 10 of those. But to get 10 of those, you just got to have 10 rental properties. And then if you're married and both spouses work, you can get 20. And a 30-year fixed financing, would you ever loan me money for 30 years?
I would not. No, I wouldn't.
Too much volatility, right?
Unless I was like loaded with money and had just hundreds of millions and maybe I want to do some sort of passive investment, but no, I wouldn't, especially not at what rates were a couple years ago, you know?
But the reason you wouldn't do it because there's too much volatility, right? In 30 years, no one can predict the future that far out. So Uncle Sam steps in and says, I'll lend you money for 30 years. And it's 30-year fixed financing is unheard of in a free market. It's a government subsidy. And especially high earners in California who are getting taxed through the nose, like they have to get these loans. It's the only real subsidy you'll ever get. Like the way subsidies work is if you're really rich, like Tesla, you get subsidies. If you're really poor, you get subsidies. But if you're in the middle, you don't get anything subsidized. So I tell people it's their patriotic duty to get these loans.
Now, what about repairs, like over time? Like I'm imagining that over time, some of these properties are going to need some sort of repairs. How are those, your property management handles that, and how involved is the investor in that aspect? Is it just like,
maintenance happens, and when tenant moves out, you got to repaint, you got to redo the floors generally, you got to do some basic handyman stuff, what we call those make-readies. And so on those, we'll send you pictures. We send you on Builder Trend software, we send you everything we know, we show you. And then, you pay us to do the repairs. But really, all you have to do is approve the repairs and pay for them.
What you guys are doing is you're basically making it really simple for people to invest out of state, and you guys handle everything for them to try to make it as passive as possible and just as simple as possible. Here's the last thing I wanted to talk to you about, Jim. You have a company called Cash Flow Tactics, And and a lot of people want to learn about investing, yet they don't know where to go. What is cash flow tactics? Who does it help? And what do you guys teach in cash flow tactics?
Yeah, so Cashflow Tactics is an education company where we show you how to get your money off of Wall Street and onto Main Street where people actually make money. And our goal for everybody in Cashflow Tactics is to be financially free in 10 years or less. So if you're like, if you wanted to learn how to wholesale or learn to be a great real estate agent like yourself, I can't help you. But if you want to learn how to recognize a good passive investment and how real estate really needs to be added to everybody's financial portfolio and why, Cashflow Tactics is perfect. And so if you go to our Facebook group, just put in Cashflow Tactics on Facebook. We have a ton of free content out there.
Anything else that you think would add value?
Just the greatest destroyer to your wealth is taxes. Like when Susie and I got married, we had 4 kids in 5 years, and I was making pretty good money in corporate medical sales. But I was paying close to 45-50% tax, right? And then my wife is having to get the bad diapers because I'm cheap, right? And Susie's like, hey, dude, like these diapers have value, these expenses. I'd like to not be having our kids have rashes. Why don't you learn a way to mitigate your greatest expense called taxes and leave me alone and give me the good diapers? And so that just fired me up to buy more real estate so that I could mitigate that tax burden. But a lot of people are just like, oh, death and taxes, that's something that's certain. And they don't try to do anything to mitigate that burden. And like, it's somewhat fiscally irresponsible not to try to mitigate that tax burden.
Yeah. And the stock market's generally, to my knowledge, not going to help you do that. I went through something similar where I paid like over $300,000 in taxes one year. I think it was like 2017 or 2018. It was like painful. And when I did that, I started reading books on how to save money in taxes. And I always heard that real estate had tax benefits, but I didn't know what they were until I learned about depreciation. And once I learned about depreciation, cost segregation studies and all that, that's when I was like, man, this is powerful. And that's one of the benefits that you guys can provide. Do a lot of your investors for Turnkey, do they do any cost segregation studies on them, or are they able to?
Like, especially you are a real estate professional. You have to buy assets because, and I know a bunch of your audience is real estate professionals, but for no good reason, real estate professionals get this special tax dispensation that your passive losses on assets you can take against your active income. 95% of the population can't do that. And so any real estate professional has to buy assets so they can get those losses.
And that's big because a lot of real estate agents don't know that. And a lot of real estate agents just pay Uncle Sam and think that they can't do anything about it, as opposed to investing in real estate. I had a buddy just do that, and he saved like $150,000 in taxes, and he was happier than hell. Now imagine if we can combine that with some better cash flow than California and less risk because of the lower prices as well too. Where can people find you, Jimmy, if they wanted to get a hold of you?
So Facebook or Instagram, just go to Cashflow Tactics or just go to Jimmy Vreeland, V as in Victor, Reeland on Facebook and Instagram, and just direct message me. I don't know if you can hear that thunder. We're getting like crushed with a storm right now.
That's what I heard. I heard that there was like some sort of flooding out there or something like that.
Yeah, that's always the other first question. They're like, St. Louis, aren't you in between 2 huge rivers? And the answer is yes. And then the other answer is we never buy in floodplains.
All right. So for all of our viewers, this was episode number 132. We had Jimmy Vreelen with Vreelen Capital and Cash Flow Tactics. Today we talked about turnkey rentals and just making people aware that if you're interested in investing out of state, there are other options for you, and there is ways to invest without you having to do a lot of the heavy lifting. And there are ways for you to still earn positive cash flow and also receive all of the other benefits of real estate.